All right, thank you for tuning in to another edition of the Vulcan Report. This is a chart of crude oil futures. As you can see, we're trading above the Kumo cloud again. We've just started a bullish phase here, hence the green crossover bar here. This is that momentum indicator that I explained to you. And you can see that we have a nice break here. Market is pulse waving. As you can see, it's trading above the black pulse wave support line here. We don't know how far it's going to run, but you can tell that right now there really is nothing here up here that's going to prevent it or act as a resistance area at this point. So we're just going to have to wait and see how far the market can run. So we'll keep our eye on it. But on the daily chart, you can see we did break out of this neutral range here that existed from around the 23rd until like the 7th. Actually, that's more like the 3rd of August. And now we're breaking out. So this is a bullish market. We don't know how high it's going to go. If we just scroll over here and take a look at what it did before. Well, before the break, as you can see, we were trading up here at the $100 level, 105. Let's call it 105. And then when that support broke, we just collapsed all the way down from 105 down to the 77 handle, which is quite a drop. This is a violent, volatile market. It can have wild swings and fluctuations. As you see here, back in March of this year, we consolidated from March until that drop came in on May the 2nd. So again, from March to May, that's a long time to consolidate and go absolutely nowhere and just fluctuate and grind you up and chop you up and take your money. That's how crude oil can be sometimes. And then even in the chop, you have these very wide ranges, these extremely large trading ranges, where the market really isn't doing anything. It's just chopping around. So that can be, like I said, that could be very difficult when you're caught in it like that. But technically speaking, we officially stopped trending after February the 27th. That was it for the crude oil, for that long bullish trend cycle that we saw that ran us up to the $110 level. And that was over after that. So at that point, from that time on, you were specifically looking for shorting positions unless you got a confirmed pulse wave. There was no way to do anything else in that market, not without a pulse wave. And you really didn't get one. You didn't get it at all. It tried to do it here on March the 19th. So you would have been stopped out on that. That would have been your last long attempt. You would have been stopped out, you reverse, and you would have been short, and you would have made back all your money and then some. But as you can tell, that was over. It was it. That was all she wrote. The market never really looked back. So if you're going to trade this, you may want to use some very tight stops. Lord willing, I will be updating the blog to give those numbers. So just check back at the blog. And that's at pulsescan.blogspot.com. And I'll put a link below the video so you can get to it. I will try to update that with the support and resistance areas and key pulse wave trigger areas, along with where to place stops, things like that. It won't be as detailed as the video all the time. Sometimes I just don't have time to do a video, and then the blog will be detailed with everything that I didn't have time to do in the video, and vice versa. So just hang in there. All right, let's move along. Let's take a look at the S&P. Okay, this here is the S&P 500, the E-mini S&P 500 to be exact. What I do with the stock index futures, what I do is I do a comparison table. And I compare the stock index futures to the cash index, okay? And that's how I come up with the correct data and the correct support and resistance areas that are to be traded. And it's a process that I go through. Won't get into all that now, but it has worked for me for over a decade, and it's the best way to go about tracking. If you're gonna trade E-mini S&P futures or the mini Dow or the mini Nasdaq or the mini Russell, you're gonna want to use the cash indexes to help you to deal with this, because when the futures, the contracts expire, they're set to the 4 quarters of the calendar year, and you have to know how to do that, and you have to really be cognizant of that. When you're trading futures anyway, you have to be careful because you have contract rollovers and things like that, and you want to know where the real levels are and trade accordingly. Okay. With that said, the E-mini S&P, this is a very, very unusual chart, and I want you to see just how we've gone nowhere, but we've been extremely volatile because of the wide trading ranges. Look at this. Look how wide these ranges are. Look at this. We've been going sideways, but in a very extremely wide range. Let me give you an idea of what I'm talking about. First range, we hit 1363 and a half down to 1302 and a half. Okay, that was your range. Okay, then the range expanded itself and got all the way up to 1374, and then came back down to 1319. All right, so that's your new floor. Then the range expanded itself again, even wider, to 1380, and then came all the way back down here to, let's call it 1321. Then the range expanded itself again and got all the way up to 1391, and then crashed back down to 1349. Then we just got another lift off and we broke 1407, and now here we are today. So what's going to happen? Are we going to breach this 1386 and a half level and crash all the way back down to pulse wave support at 1348 and then continue to crash? Or are we going to really kick in and have a new bull market? As you can see, we are bullish. Here's the green. Here's the green bull here on the bottom right hand corner. And you see we started with the momentum, and now we're keeping up with this momentum. It's lasting longer than the previous one, which has only lasted a couple of bars, see, from here to here. And then we went bearish again. So the pattern's been bullish, bearish, bullish, neutral, bullish, bearish, bullish, bearish, bullish, bearish. It's like every other movement, your movements last about 3 days and then you get bearish again. But now that cycle seems to have been broken now. Okay, so that's what we got to take a look at. Are we really going to get bullish this time after all these false starts? Or are we just expanding this wide trading range? We're going to have to wait and see about that. Hard to say. Don't really know. We're going to have to see what the market tells us. But I would say I would be cautious buying up here, because look, the last failed pulse wave breakout ended in disaster. This one here too ended in disaster. This one here did well. This one here ended in disaster. So it's almost like the luck of the draw here. You have to really be nimble and try to have your stops as tight as possible. Trend traders right now are basically having a time at this because the market really isn't doing anything. It's really not trending, as you can see here. You know, bullish, bearish, bullish, bearish, bullish, bearish. What are you going to do with that? There's nothing you can do with that. There's absolutely nothing you can do. If you really break this down from May the 1st of 2012 until now, the market has done absolutely nothing. We are exactly where we were in May the 1st. So to sell in May and go away worked to perfection. Look at that. Here we are. Sell in May and go away. If you sold on May 1st and didn't look back, you booked the profit here. If you held, you had to ride from here all the way down to here, giving up months of gain. You would have given up gains from, looks like you would have given up all your Christmas money. The run from Christmas until May, you would have given up. You would have had to watch all that profit erode and evaporate had you held that. Isn't the market a cruel beast? And now here we are. So the question is, can we get a close above the 1415 level? The last time we were here, as you see, we broke down. Here we are again. Are we going to repeat history? Is history going to repeat itself this time? Are we going to break down? Is that 1389 3/4 support going to hold, or is it going to crack like an egg and we're on our way down? That's a key support, people. That's a key support. 1389 3/4. This is like deja vu for me all over again. Back the week of 9/11, we had a key support area like that. If my memory serves me correctly, on the S&P 500, it was 1242 3/4, and that support broke prior to 9/11, and then when 9/11 happened, it just really escalated. So here we are again. This could be looked at as a double top if we fail here, ladies and gentlemen. We need to run. Okay, here's a weekly chart to give you a better idea. Alright, here's where we were. Okay, this is May the 4th, that week of May the 1st. Alright, 1415 I told you about. And then here we are now. As of yesterday, August the 8th, we hit 1407. Are we going to fail is the question. Are we going to fail? We cannot take out that 1389 3/4 support. If we do, I fear we're going to go from there all the way down to 1317, ladies and gentlemen. 1317 will be in play if we take that out. You do not want to see that taken out, because not far from 1317 is the 1299.5 negative pulse wave support. If that negative pulse wave support is triggered, you do understand the market will be in dire jeopardy. We're going here to this support right here. This is where we're going. Alright, look at that number, 1153.5, and after 1153.5 we test 1069 3/4. Those are your supports. Here, this is a small support here, a very weak one here at 1258. But here we are, key levels to watch. Okay, 1299.5, 1258 3/4, 1153 3/4, and 1069. Those are the pulse wave targets that we're going to travel if this initial support here, this critical support, is taken out. I just want to reiterate that. You don't want to see this market do that. You don't want to see the S&P give up that much profit. If it does, then the market's toast, and we're looking at a financial Armageddon collapse in these markets. Alright? We have no other precedent to base this on except for that. Alright, there's nowhere else to go. Alright, so remember, take what you can, give nothing back.